After a somewhat traumatic March, we saw modest recovery in world markets during April, with most of the major indices seeing rallies of between 1 to 3%. However, leadership overall remains narrow, with the positive returns in the US being dominated once again by a small number of large tech businesses. Globally, smaller companies have continued to underperform large companies in 2023 so far, with this trend being particularly pronounced in the US and the UK. The fallout from the collapse of SVB Bank and Credit Suisse in March has continued, most notably in the US regional bank sector, where equity valuations have plummeted as depositors take flight and move to money market funds or Apple for better rates. Indeed, US short rates now stand at a post-global financial crisis high point, and these capital flights have resulted in further bank collapses, notably First Republic, which has been rescued by JP Morgan Chase. Further major consolidation in the US banking system seems inevitable. We continue to see increases in global interest rates, with the Fed, the ECB, and the Bank of England all still in tightening mode, with levels of inflation remaining elevated despite energy prices falling sharply from their peaks. This issue is most pronounced in the UK, where the March inflation figure remained at a stubbornly high 10%, and another 0.25% rate hike now seems likely in May. As a result, gilt yields rose during April and are a reminder of the increased funding costs and weaker liquidity that we are now seeing across the broad economy. We can only hope that we are nearing the end of this cycle of rate normalization, and it's encouraging to see more stable trends emerging in the housing market and across broader economic growth indicators in general. Market sentiment towards UK equities remains fragile, and we continue to see outflows from UK equity funds, confirming the very weak trend of recent years. We do face considerable challenges in re-establishing the UK market as an attractive place for companies to list and raise capital, so the recent FCA consultation is a welcome step in the right direction. At the risk of sounding like a stuck record, we do believe that there is now exceptional value on offer in UK markets as a result of these liquidity challenges, and we continue to focus on businesses with conservative balance sheets, sustainable margins, and strong cash generation. Whilst earnings remain broadly under pressure thanks to elevated energy and labour costs, rising interest rates, and higher corporation taxes, there is increasingly a view being formed that a lot of bad news is already priced in. We are now seeing a pick-up in M&A activity with recent approaches for businesses such as Wood Group, Decra, and Cape, and we would expect this trend to continue. If investors don't realise the inherent value in markets, then private equity and trade buyers may well do so on our behalf. The fund rose by 2.1% over the month and was behind the benchmark return of 2.9%. Two of our larger holdings, Kinetic and Ashtead Technology, benefited from strong results and upgrades to their profit expectations, rising by 13% and 12% respectively. Retailer Halfords also rose by 17% as investors took heart from a more encouraging strategic update, which targets a significant profit improvement from the current low base. Two of our asset management holdings, Gresham House and Polar Capital, saw recovery in markets boosting their valuations, with Gresham continuing to show strong growth in fund inflows. Granger and Mortgage Advice Bureau both rose in value by 11% as concerns over the housing market began to abate, with rents remaining strong and mortgage markets stabilising. The weaker performances in April were mainly focused in two sectors, energy and technology. The oil price continued to decline despite OPEC production cuts, leading to falls in our holdings in Jadestone and Energean. Several of our tech-related holdings lost ground, with Learning Technologies falling 13% in response to weaker guidance, and AlphaWave losing 12% in response to a delay in producing their final accounts. In a similar vein, small chemicals business HighQ also fell sharply on an accounts delay. Lion Trust shares were weak, with the proposed purchase of GAM going down badly with investors, whilst TT Electronics fell as markets digested the loss of their well-regarded CEO. It was a busier month in terms of dealing activity, with 2 new holdings added to the portfolio and 3 holdings disposed of. We invested in franchise brands, which recently acquired the Pertec hydraulic repair franchise and raised £92 million in new equity, giving us an attractive entry point. A holding in wealth manager Brooks Macdonald was also established, where we see the positive organic growth in fund inflows combined with a low valuation, offering material upside to the share price. To fund this, the fund disposed of the remaining holding in Rathbones, where the acquisition of Investec Wealth will take some time to complete and integrate. The holding in Cape Technologies was sold in response to a final offer price and the bid going unconditional, whilst the remaining small holding in ATG Group was sold after a recent bounce. We added to the gaming developer in TinyBuild after a period of significant price weakness and further reduced our exposure to CMC markets in response to yet another disappointing profit warning. The fund continues to have good levels of liquidity with cash of 6% at the month end. This presentation is a financial promotion issued by Amati Global Investors Limited, which is authorized and regulated by the Financial Conduct Authority. It is provided for informational purposes only and does not represent an offer or solicitation to buy or sell any securities, nor does it provide all the facts needed to make an informed decision about investing in the fund. Prospective investors should always read the key investor information document and the prospectus, which contain full details of the costs and charges applicable to the fund, as well as specific risk warnings. These documents are available at www.amatiglobal.com.